Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Endurance Technologies Limited, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Jalan from Axis Capital. Thank you, and over to you, sir.
Yeah, thank you, Margaret. Good morning, everyone. Welcome to the Q4 FY22 results conference call of Endurance Technologies. From the management team today, we have with us Mr. Anurang Jain, Managing Director, Mr. Ramesh Dehane, Director and CEO, Mr. Massimo Venuti, Director and CEO, Endurance Overseas, Mr. Satyajit Ray, Director and Group CFO, and Mr. Raj Mundra, Treasurer and Head Investor Relations. I will now hand over the call to Mr. Jain for his opening remarks, post which we can start the Q&A. Over to you, Mr. Jain.
Thank you very much, and good morning to everyone. I would like to share details of how we have done in the fourth quarter of FY22 and in the financial year of FY22. In India, in the fourth quarter of FY22, as per CM data, the two-wheeler industry sales de-grew by 18.4% compared to the previous financial year. Scooters de-grew by 22.4% and motorcycles de-grew by 16.5%. The automotive industry in India had a degrowth of 13.6%. In Europe, in quarter 4, there was a degrowth of 10.8% in the European Union automotive sales. On the financials, I will briefly talk to you about the fourth quarter of FY22 and then on the financial year FY22 numbers. In quarter 4, our consolidated total net income was rupees 20,914.76 million as compared to rupees 21,397.7 million compared to quarter 4 of the previous year. Consolidated EBITDA was rupees 2,698.12 million as compared to 3,390.47 million in quarter 4 of FY21. Consolidated EBITDA margin was at 12.9%. The net profit was rupees 1,361.8 million at 6.5%. There was a Maharashtra State Mega Project incentive in quarter 4 of rupees 43.47 million. In quarter 4, our standalone total income was rupees 15,640.65 million as compared to rupees 16,015.26 million in quarter 4 of FY21. Standalone EBITDA was rupees 2,064.65 million as compared to rupees 2,394.16 million in quarter 4 FY21. The EBITDA margin was at 13.2%. Standalone net profit was rupees 1,147.34 million at 7.3%. There was the Maharashtra State Mega Project incentive in quarter 4 of rupees 43.47 million. For the financial year FY22, our consolidated total net income was rupees 75,901.78 million as compared to rupees 65,777.31 million in financial year 21. Consolidated EBITDA was rupees 10,056.76 million as compared to rupees 10,709.24 million in the financial year 21. Consolidated EBITDA margin was at 13.2%. The net profit was rupees 4,607.09 million at 6.1%. This includes the Maharashtra State Mega Project incentive of rupees 633.9 million. In FY22, our standalone total income was rupees 57,214.81 million as compared to rupees 47,865.83 billion in financial year 21. Standalone EBITDA was rupees 7,530.52 million as compared to rupees 7,451.35 million in financial year 21, with an EBITDA margin of 13.2%. Standalone net profit was rupees 3,817.43 million at 6.7%. This includes the Maharashtra State Mega Project Incentive of rupees 633.9 million. There was no net debt and there was a consolidated positive cash available of rupees 4,586 million. The detailed financials are available with the stock exchanges and on the Endurance website. I would now like to share certain key points for the financial year 2022. In FY22, 75% of our consolidated total income, including other income, came from Indian operations, and the balance 25% came from our European operations. In India, in FY22, rupees 7,450 million of new business was won from OEMs other than Bajaj, which included HMSI, TVS, Hero MotoCorp, and Royal Enfield. This included rupees 1,595 million of new orders for EVs, including rupees 530 million order from Ather for brake systems and rupees 700 million worth of orders from Polarity Smart Bike for suspension and brakes. New order wins also included the non-automotive casting business of rupees 1,200 million for applications like gensets and 5G telecom. Both these businesses will start in this financial year. I would also like to mention that we have rupees 20,380 million worth of requests for quotes from OEMs, which are in process. We are extremely happy to inform you that we have executed the share subscription and purchase agreement for acquiring 100% of equity share capital of Maxwell Energy Systems Private Limited in a phased manner. Maxwell is in the business of embedded electronics, particularly in the battery management systems of the BMS for automobile EVs and battery packs. With the rapid transitions into EVs, the battery management systems are expected to have a good growth. We plan to leverage Maxwell's deep technical expertise developed over the years and his BMS deployment experience both in India and Europe. We aim to offer our products to multiple new clients, including Indian and overseas automotive OEMs and manufacturers of battery packs. At present, Maxwell supplies to over 70 automotive OEMs and battery pack makers spread across 15 countries, including India, France, Spain, and USA. Since its inception, Maxwell has deployed over 65,000 smart BMSs in EVs and stationary storage systems and has active orders in the pipeline of over rupees 1,500 million from OEMs in India and Europe. This also includes orders from one of the largest two-wheeler OEMs in India. The upfront fixed payout for 51% equity stake is rupees 1,350 million. The balance payout of maximum rupees 1,730 million will be based on achievement of targeted financials between FY23 and FY27. The 51% stake will be purchased in Q1 of this financial year, and the balance 49% stake will be purchased in 5 tranches spread over the next 5 years. As informed in the February quarterly investor call, we have added a new product, which is the drive shaft. The drive shaft is a high technology proprietary product and an EV agnostic product in an automotive application. A drive shaft transforms the torque generated from an engine through its transmission to the wheels. The application is for 3-wheelers and 4-wheelers, including some LCVs. The Indian drive shaft market is approximately rupees 20,000 million per annum for 3 and 4-wheeler applications. The competition in India is mainly from GK and Driveline and Next Year Automotive. We are starting business with Bajaj Auto from July 2022 as a new state-of-the-art plant is already set up at Baluch, Aurangabad. We have also started development of drive shafts with Mahindra for the Alpha electric vehicle 3-wheelers, and samples have been supplied for testing at Mahindra. We have also recently got the LOI from TVS for drive shafts for the Duromax 3-wheelers. Our USP at Endurance is our short development lead times, competitive price, world-class manufacturing, and a strong supply chain. At Endurance Overseas, as informed earlier, we have also acquired 100% stake in a small company, Vicoli SRL Italy. Vicoli enables fleet operations to increase route efficiencies, enhance safety, optimize maintenance activity, and lower fuel costs. With this acquisition, we seek to expand our innovative solution offerings in the mobile sector in Europe. I would also like to mention that Endurance is focusing on a more value-add and profitable product mix in its future business, which includes braking, suspension, and casting supplies to 2- and 3-wheeler electric vehicle OEMs and startups, 200cc plus motorcycle brakes and clutch assemblies with help of acquisition of Adler and Gremica in Italy in the year 2020. The 200cc plus motorcycle brake business has already started last year, and the 200cc plus motorcycle clutch business will start in the second half of this financial year. The other product mix focus areas are the paper-based clutch assemblies replacing the cork-based clutch assemblies for motorcycles, continuous variable transmissions or the automatic clutch for scooters. With Hero MotoCorp, we are at an advanced stage of testing and we expect to start supplies from Q4 of this financial year. We will also be increasing our anti-lock brake systems or the ABS business for the 150cc plus motorcycles with a collaboration with Beijing West Industries. As you are aware, we already started supplies to Bajaj Auto and Royal Enfield. We are also increasing our business of 200cc plus motorcycle inverted front forks and adjustable rear monoshock absorbers. This is with the help of our collaboration partners KTM AG. We are working with KTM to increase supply of both on-road and also start with off-road motorcycle higher technology inverted front forks and rear monoshock absorbers. And we have already made a 3-year plan for it. We are also focusing on fully finished machine castings as compared to raw castings and semi-finished castings for 2, 3, and 4-wheelers. As the disc brake assembly business is growing with addition of Bajaj, TVS, Royal Enfield, Yamaha, Hero MotoCorp, and HMSI new orders, we are increasing our plant capacity of disc brake assembly from 285,000 brake assemblies a month to 570,000 brake assemblies a month, and discs from 375,000 numbers a month to 675,000 numbers a month. Our second brakes plant at Baluch, Aurangabad has been set up for this increase in volumes and has already started operations. By October 2022, which is this year, we should be supplying 470,000 disc brake assemblies a month from both our brake plants. We are happy to inform you that the supply of 2-wheeler ABS assemblies to Bajaj Auto has started in last week of September 2021, and also ABS assembly supplies have started Royal Enfield from February 2022 onwards. Our plan is to reach a run rate of 400,000 ABS assemblies per annum by September 2022. As you may be aware, competition is mainly from Bosch, which controls a major market share in the Indian ABS motorcycle market, which requires approximately 3 to 3.5 million ABS assemblies per annum. So this, as you all know, is a very large business opportunity for Endurance. We also focus on supply of our products for EV 2 and 3-wheelers. We have already started supplies of brake assemblies, suspension, and aluminum castings, both for electric scooters and 3-wheelers. Our focus is to supply our EV products to 2 and 3-wheeler OEMs and also new startups and companies including Ola Electric, Ampere, Okinawa, Polarity, Ather, and Hero Electric. We have now also started focusing on e-bicycles business, especially for our suspension and brakes, both for India as well as for overseas. Due to increased orders from Bajaj Auto and Yamaha India and a new rupees 1,446 million alloy wheel order from TVS, we have added a new plant at Chakan, Maharashtra, to help increase supplies from 240,000 alloy wheels a month to 320,000 alloy wheels a month. The plant will start operations in this month itself. The supplies to TVS are starting in June, which is next month. We have also recently won the front alloy wheel or rim order from Hero Electric, and supplies will start in this financial year. The volumes are expected to increase to rupees 1.2 million wheels per annum by FY27, with an approximate sales value of rupees 1,350 million per annum. As far as Europe is concerned, in FY22, we have won 71.4 million euro of business from Porsche, Daimler, Case New Holland, BMW, and Stellantis. This includes a 40 million euro new order for transmission housings for mild hybrid and full hybrid EV applications for Stellantis. This business will start in the second half of 2023. I would also like to point out that Endurance, both in India and Europe, is actively pursuing its focus on gaining access to new technology and focusing on new product, organic and inorganic growth. I would also like to mention Endurance has also entered 2 backward integration product areas, which are import substitutes also. First is the aluminium forging acid clamps required for our inverted front forks. Endurance has entered into a technical collaboration with FGM Italy, and supplies have started at our Aurangabad plant from April 2022 for Bajaj Auto as well as for direct exports to KTM. The second product is the wire steel braid hoses for ABS applications for mid and high-end bikes. These supplies have also started at our Aurangabad plant. Both these other projects will help us in our future profitable growth for both inverted front forks as well as for ABS. In the financial year FY22, our aftermarket sales grew from rupees 3,116.21 million in the previous year to rupees 4,212.33 million in the financial year FY22. The aftermarket business was at 7.36% of our net India standalone sales in the financial year FY22. This is the only B2C business we have in the group. We are also exporting our aftermarket parts to 30 countries, and we will be adding now 4 more countries in this year. The export sales for India's standalone business increased by 22.15% from rupees 1,834.84 million in FY21 to rupees 2,241.19 million in the financial year FY22. This mainly included increase of sales of machined aluminium castings to Getrack overseas, as well as our aftermarket exports. On the environment front, I would especially like to mention that Endurance is striving to be carbon neutral in its plants by effective use of solar power and wind power, creating carbon sinks by driving tree plantations and thereby creating dense forests, and driving use of natural gas and LPG in place of electric power and furnace oil. We are also focusing in lowering hazardous waste generation and to achieve zero waste to landfill. At Endurance, it will be a continuous endeavor to grow through organic and inorganic growth with a focus on technology upgradation, quality improvement, cost, and environment, health and safety. We will do our best to fulfill all our stakeholder expectations by following our 5 values of customer centricity, integrity, transparency, teamwork, and innovation. With these opening remarks, I would like to invite questions from all of you. I'm extremely happy to inform you that we have both the Maxwell founders, Mr. Akhil Aryan and Mr. Alex Collett, to take your questions on Maxwell. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. The first question is on this new acquisition. So one, I wanted to know what was the push from the existing promoters to sell this business, when the business is doing so good, as per your opening commentary? Because I'm assuming the promoters are cash rich. And second, how do you bring the value to the table, in this kind of a business? Because it's a very new business for you. Because what we have seen being more of, suspension and die casting. So, being into a thermal management, how your value add gets added more here? That's my first question. Then I have two more questions after that.
Yeah. So I think what I'll do is I will answer the second part first, and then I'll request Akhil Aryan to answer the first question. Okay. So as you know, the battery management system is the brain of a battery pack. The battery management system is amongst the highest value EV products. I believe it's about 5 to 7% of an EV vehicle. That's the wallet share which it enjoys. Now, you all are seeing the thrust on EVs, the government push on EVs. Environmental sustainability is a big thing. So we could not have lost such an opportunity with a company with such a, I would say, experience over the last 5 years in deployment of over 65,000 vehicles, having that experience and a very strong, I would say, product strength, which I'll request Akhil Aryan and Alex Collett to explain to you later. Along with the strengths of the client base which Endurance enjoys over the last 34 years, as well as our strength in manufacturing and supply chain. And that's the reason Endurance, this is the first, I would say, though most of our products are, 95% of our products are EV agnostic. But this is the first EV, I would say, specific product for Endurance, which is high value, as we've always said, we get into high value areas. And so this was, I think, the rationale of getting into this space. And we believe, like all of you believe, that EVs is the future. We believe scooters, buses, three-wheelers are already gaining traction, are going to increase. But I'm sure it will be followed by other EVs. So we had to be a part of this journey. And that was the rationale from Endurance side. And I request Akhil Aryan.
Yeah. So just one, I'm sorry for stopping you here. I understand BMS is, let's say, going by your value, it's a 5-10% of the overall vehicle. Even, let's say, another product, a motor or a motor controller unit, tricky products, more than 15-20% of the product. Why not there as well? So the question was more not because there is an opportunity side. The question is that we have zero R&D in these products, and generally companies do acquire any new tech product when they have done R&D and they want to scale up that R&D to an eventually good product. So is it rational just because, there is some value to it, let me put money? I'm asking more from a scale-up perspective, that what you will bring to the table, it's more of the money which you'll be putting going ahead. If you can share some numbers in this company, what's the maximum revenue it can do, or the capital employed, my question was more from that direction rather than, there is an opportunity side. So the other products also has the opportunity side. So my question was, why only a thermal management where we have not done any R&D?
So see, firstly, like I mentioned, that Maxwell has a very strong technology base, which I'll request Mr. Akhil Aryan and Alex Collett to explain that to you. But at the same time, they have experience over the last 5 years of deploying more than 65,000 vehicles, both in Indian and European roads. Already approximately 50,000 vehicles are running in EVs, which they've explained. There are many EVs like Hero Electric, Okinawa. There are many Ampere. There are many companies where already their BMS is available. They have a long experience on that. So I'll leave that question to them because they are better positioned to answer. They also have, like I said, over 1,500 million worth of orders. We plan to do about 400 million rupees in this financial year. And as you know that we are also interacting with our client base. So we see a great opportunity. Plus, you have motor controllers, you have batteries. But the question is, we have to see where the opportunity is. And this acquisition includes the complete technology, the strength of its people, and whatever they have worked for in the last 6 years. build a very, very strong company in terms of technology. So I will now hand over to Mr. Akhil Aryan as well as Alex Collett to answer the first part of your question, but I would like them to answer the technology part first, if they can. Akhil and Alex.
Yes. Hello, everyone. My name is Akhil. I think to answer the question around R&D and technology, the first thing I'd like to highlight is that Maxwell is not a BMS company. It's an advanced electronics company, and the BMS is our flagship product. So with regards to motor controllers, telematics, and others, we have built the company from the standpoint of developing core capabilities around advanced electronics, and the BMS is the manifestation of that in its first format. Coming to the point of what Endurance brings to the table and why we are very excited and interested in this partnership, I think that we must acknowledge that when it comes to electric vehicles, the market is at an inflection point. Not only are there new age OEMs that have launched their vehicles, but now I would say the age-old, tried-tested OEMs that have deployed millions of vehicles in India and abroad are taking electric vehicles very seriously. Hero, Bajaj, TVS, Honda, you name it, they're all entering the EV market either this year or the next one. There is an exponential growth in demand, even adoption from customers on electric vehicles, as we've seen, has been quite significant. But the reality today, when it comes to companies like Maxwell, is that there are supply chain, not issues, but I would say challenges with regards to semiconductor access. The operational issues of being able to scale up a business, even though we have a strong product, R&D, technology, and team, when road meets the rubber, we have to be able to scale up our manufacturing and supply chain to be able to deliver to large OEMs that are relying on us to sort of supply these products on the assembly line. From our standpoint, both the ability to take our technology and get into conversations with global OEMs, which is something that's very difficult, and Endurance has, of course, built a long-standing partnership with practically every single global OEM out there, being able to showcase our technology and make a case for our products to enter those vehicles as they get on their electrification journey, as well as inheriting from the core values and I'll say the skills around operational excellence of Endurance that we can adopt in order to strengthen the supply chain and be able to supply reliably are things that we are very, very excited about. Last thing I'd like to highlight, we spoke about, what is being invested, what is the future for Maxwell. And I think that the third part is the resources that will come inside of Maxwell as part of this transaction are going to help us expand the advanced electronics R&D team, and the BMS is not going to be just the only product in our product portfolio. With Endurance, we are planning on building a portfolio of high value addition to our customers as well. Electronics that help improve the pace at which the planet and especially India is moving to an electric future.
Thank you very much, sir. I'll come back with you.
Thank you. The next question is from the line of Aditya Jhawar from Investec Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations to the team for pouring into BMS and strong set of numbers. My first question is on BMS. The number one is that we have seen some ramp up in the last couple of years in the revenue stream, and expectation is that it will only increase in the next 3 to 4 years. Now, in this backdrop, I'm wondering if you can give a sense on what could be the profitability that you expect when the business reaches a critical mass. That is, a question number one. And following the question on the BMS line, so, what is the thought process of having a in-house manufacturing for this product versus outsourced manufacturing, and what could be the capex requirement for, BMS over the next couple of years?
See, as you know, I never give forward-looking numbers, and you know that. Like I mentioned, we have about over rupees 1,500 million worth of orders already. And Endurance always believes in profitable growth. We have seen it in the last 6 years since the IPO. And I can only say that with our strength of our supply chain, with the strength of our manufacturing in-house in future, with our client base who trust us after so many years, and the strong technical capabilities which we have at Maxwell and the experience we have of the deployment of vehicles on road and the corrections made of any issues which may have been faced, that experience which is there cannot be taken away. I can only say that we have made a very robust plan up to FY27, and of course the focus will be on profit growth as we have always done in the past.
Okay. Anything on CapEx, Anurag?
As far as CapEx is concerned, on the technology front, the CapEx is already part of the business plan. But yes, any investments which will help to further grow the business beyond the business plan, of course, we would like to do it. We would not like to miss any opportunity there, as far as the sales growth is concerned. Also, in future, once the in-house operations also start, at that stage also, whatever investments which are required, what I believe is not very high for a company like Endurance. And that will be also in future because we have a very strong, supplier outside. We cannot name them, but a very, very strong supplier. So we'd like to, of course, we'll work with him. But as a growth in business, we also have plans to, do this in-house. But the capex is not significant enough to really affect Endurance, to be honest. So sure. That's the way I'd like to put it.
Perfect. Now, if you see in the last, few months, this entry into BMS and drive shaft, these two verticals could potentially add about 1.5% of revenue in the next couple of years each. So do you have any number in your mind that the new areas that you would like to enter, whether organically, inorganically, technological partnership, what that number could be? Do you think that there is an aspiration that you have that 20% of the revenue should come from the new product that you plan to launch in the next few years? Any such number in your mind?
Well, see, we of course have a number for Maxwell. We also have a number at Endurance. But, I cannot give, these numbers at this stage because I don't like to give forward-looking numbers because there are so many uncertainties in this world. And these numbers for some reason can be less, can be more. That only time will say. But I can say one thing, that Maxwell acquisition is a part of our focus of embedded electronics, and this focus started with starting ABS, as you know, which is a hydraulic electronic control unit. Even our high-end products of Adler, as electronics, we are also working on an adaptive electrical, ray shock absorber in the future front fork. So electronics is something we have taken up. We'll be setting up an electronics lab at Chakan in Pune soon. We have a very, very strong team at Maxwell, which will also help us in our journey of embedded, electronics. So I would say that apart from our products, which ABS already started in future suspension and brakes, suspension and transmission, which is the clutches, we have Mr. Akhil Aryan said, that we have also new products which we are planning to launch. But BMS is today the flagship product, and that's why we are talking more about that. And that's also a high value add product, and that's an opportunity which we had in Endurance, and we took it. So you have to see what opportunities are available, and we are very confident of this product and new products, which both will be done at Maxwell and at Endurance. And definitely it will be a profitable growth. And definitely it will not be 1.5%. Let me assure you that. We don't acquire businesses and get into businesses, to have such low percentages of share of business. So I can just leave you with that.
So that's helpful. My next question is on Europe business. So how should we think about, margins in FY23? Are you seeing some of the headwinds of, metal and gas prices receding? While, aluminium, we have a pass-through clause, but, for the gas price increase, were we able to pass a significant portion, to the customers? That's the first question on Europe.
So I'll request Mr. Massimo Venuti to answer that. Massimo?
Yes, I'm here. So for sure the situation today in Europe is really tough due to the situation of energy cost. Energy and gas reached an unbelievable price. also before the Ukraine war, but now I believe that also for the next 6 months, 9 months, the situation will be more or less stable. Also because in the last period of time we have seen also the situation of future more or less flat with the actual price. And only to remind you, in this moment, in the last quarter, we have had an increase of more or less 430% for the gas and 320% for the electricity compared 1 year ago. And so for sure this situation is not sustainable in the medium long term. Something it happens from in our negotiation, in our discussion with our customers, because they understood very well that they can go ahead in this direction without recognize this increase of cost to the supplier, because otherwise 90% of the supplier base will go in bankruptcy. With BMW, we obtained part of this recover, even if in our product portfolio we are thinking about only 5% of our total turnover. We are discussing also with the other customers, but frankly speaking, our expectation is that in the short time, a quick solution between NATO and Russia and Ukraine regarding this situation, because this is the only way to reduce the impact of the energy and gas in the European market, because we need a lot of time in order to be independent from Russia, and this is not feasible in the medium long term, in the short time, because this situation is affecting in important way the automotive business. In the previous quarter, as Mr. Jain told you, we lost 20% in terms of market, but please, also the month of April was very bad, with 2%, and the expectation for May is more or less the same. Regarding the material, for sure is a big problem, because we have had an important increase of aluminum, even if in the last week apparently there was a reduction of 2-3% compared the last quarter of 2021. For us, it's not a problem, as you know, because every 3 months we have a rule and we recharge this cost to the customer. But for sure, this increase of material cost affected our EBITDA. We closed in this financial year with 14.1% in terms of EBITDA, but without consider the impact of the increase of aluminum, the EBITDA should have been 15.2%. And so 1.1% is the reduction of EBITDA due only to the increase of aluminum. And on top of this, the energy cost effect in the total financial year 24-22 was 6.4 million euros, and so it means 3.2% of our EBITDA. And so even if the situation continues to be very tough, as Endurance Overseas, we have been able offsetting these two aspects to reach the 18.3% of profitability, that is more or less the same profitability of the previous year. For sure, the only way to overcome this period of time are the volume. If we don't increase the volume, if the market don't start again with a normal level of volume, the situation will be very tough. But this will depend from the semiconductor, from the war in Ukraine, also from the interest rate, and also the inflation. As you know, in European market, we are not used to work with 6-7% of inflation. And so I believe that in some way, in the future, in the next month, the situation will continue to be tough, but I want to underline one aspect in the European market of the previous financial year. In this year, we have been able to acquire 71 million euro of new business. This is the best performance of the last 5 years in terms of acquisition. And so it means that the market is moving for sure into the electric technology, but as Endurance, we are a reliable partner for our customer. Otherwise, we are not able to acquire this level of business. And so I continue to be optimistic for the future profitability of the company.
Perfect. That's it for me. Thanks a lot. All the best.
Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. A couple of questions on Maxwell acquisition. Yeah, can you hear me?
Yes, I can hear you.
Yeah. So a couple of questions on Yeah, you're audible. So on the Maxwell acquisition, what is the minimum valuation which you'll have to pay for the balance acquisition of stake? Max, you indicated 1.7 billion, but the minimum would be?
If that's a figure, I'm sorry, I cannot share with you. I can't share that figure with you. I've told you the maximum.
Okay.
Yeah, like I said, it depends on the targeted financial achievement in the next 5 years.
Understood. No worries. Second question is with respect to the competitive advantage which Maxwell brings to the table on the BMS side, vis-a-vis many players who are there in the market who are also offering BMS. This question primarily needs to be seen in context that neither Endurance nor Maxwell has PLI benefit, unlike many of your competitors. So in that context, what gives us confidence to gain share despite cost disadvantage, or rather despite incentive disadvantage?
Okay, this I will request Mr. Akhil Aryan to answer this. But just let me tell you one thing, that our manufacturing operations will be at Baluj, Aurangabad, which enjoys a mega project incentive. So as you know, that whatever we invest, we get 100% back within 7 years, 6 years or 7 years. That cannot be avoided. We are fortunate to be in an area like Baluj, Aurangabad, which is in D zone. And Maharashtra state has we have a very good experience of paying us this money. So whatever incentive we get, it is paid well on time. Only during COVID there was a slight delay, but they are very, very good at that, the Maharashtra government. So let's not ignore that fact, that whatever we invest, we are going to get a very large incentive, 100% of all the investments we do on this, which is not available to everybody who is not in Baluj, Aurangabad, So just want to start, and then I'll hand it over to Mr. Akhil Aryan to answer you.
Yes. So to answer the question around competition, I think what's very important to understand is that Maxwell started as a company in 2017. Today we have over 5 years that we spent developing the R&D, not only just working on the R&D in the lab, but really deploying this inside of vehicles that are on the road, that are driving for millions of kilometers. If you look at the other BMS players out there, you either have for example some mega suppliers like Continental, Bosch, X, Y, and Z that are focused primarily on the 4-wheelers in Europe or in North America. The companies that are actually supplying BMSs and advanced electronics to the OEMs that have mass deployment in India are not necessarily coming from India. They're either simple protection circuit modules that are being imported from China, or some small in-house development that some of the new age startups are doing. There are sure some global I would say BMS players that are trying to enter India through some partnership or contract manufacturing in India. But the reality is that there is absolutely no company like Maxwell that has deployed these products on Indian roads, learned from the issues, the challenges that are very specific to India, right? We are not a European company trying to push products into India with just optimized manufacturing. We have optimized the product. We have value engineered the product. So from a cost standpoint, it's not just about incentives. It's also about choosing the right components. It's about how do you build better software and embedded software that goes inside of the microcontroller that eliminates some of the hardware components and reduces cost. I think that given the fact that we have tried and tested this product, we're also far more safer and reliable as a choice for Indian OEMs or OEMs that are wanting to deploy in India or abroad. We have also been one of the only companies in the world, not just in India, to build functionally safe ISO 26262 compliant BMSs that are automotive grade, which are MSIL D, ASIL C rated. This is an extremely difficult certification to get. There are less than 10 companies globally that would potentially have this, including the OEMs. And we are one of the few companies that started that journey in 2018, and it took us 3.5 years to get there. I also want to highlight that from a technology standpoint, right? Since we started the company, and also coming from a strong software background myself, we have built the entire product and technology on a platform. So we have taken a platform approach instead of a product approach, which allows us to essentially leverage the same code base across all different BMSs, which means that whether you are deploying a BMS for a small 2-wheeler, 4-wheeler, bus, truck, the core technology and algorithms will be consistent, and the learnings that we get from one deployment will inherit into the future deployment. This also means that there is a strong technology and software backend to the actual hardware that is being supplied. So I want to stress upon the fact that we are a technology company and the hardware is a delivery mechanism of the embedded software that we are developing. What does that mean? It means that every BMS that we are deploying has over 260 configurable parameters that we can configure, and that allows us, this software flexibility allows us to use the same hardware across different chemistries. So I'm sure all of you are aware there are different lithium-ion chemistries that are being deployed in different types of vehicles. There are different types of cells and technologies that are being used in the electrification journey. Now, instead of having to do R&D every single time and develop new products and new boards for every new chemistry, we have invested into the technology of a platform that allows us to configure the same hardware and use it across chemistries, across applications. The software also allows us to get to market faster because we have spent a lot of time on the R&D and built it in a configurable manner. So we have faster time to market. We have a better inherent technology. The algorithms for state of charge, state of health, state of energy and power, which effectively lead to better range estimation, faster charging, and range optimization as well. All of those have been optimized for India, but like Anurang also mentioned, we have deployments in 15 countries. So, we are CE certified, we're supplying to customers in Europe in production. And so these algorithms have really advanced over the last 5 years to a point that we're highly accurate. So that helps us, beat competition, so to say, when we are in the market. All of this being said, the two other things that I want to highlight which also help us win, one is that we have built a very strong in-house R&D team. We are not doing a licensing business where we license technology from somewhere and we are just contract manufacturing and supplying it over here like some of the other players in the Indian market today. We have over 100 team members in India that are focusing on R&D. So if there is, for example, a new feature that needs to be developed, if there is some new R&D to be done for faster charging, improved range, better safety, we can do that in-house inside of our company in India and deploy that at the customer end. Lastly, on the cost, since you mentioned, I think that, of course, incentives are a big part of the cost, but I believe that the product itself has to be designed, value engineered and designed for the safety, the features that you want to offer to the customer, and also value engineered for mass deployment. So we've really focused on the design and the product itself, and now with Endurance leveraging better supply chain operations, manufacturing, we'll be able to beat competition on prices while also offering better quality and value to the customer.
Got it. Thanks for elaborate answer. Second question pertains to who are our key customers currently and which all segments do we cater to?
Yes, so we work with various different OEMs. Of course, there are many new age OEMs that we work with. I can name a few of them. Some of them I can't name just yet. For example, the ones that we're in production with is a company called Electric Motion in France that has been building motorcycles with our BMS for over 3 years now. There's Ray Electric in Spain that we've also done a press release with that are building high performance scooters based out of Spain, and they have been in production with us for quite some time. In India, we've been working with many large battery pack makers. Again, unfortunately can't name them just yet. Very soon, now that they know about this partnership, we will get their consent and we'll be able to name them, in the future. But as it stands, I can tell you, practically speaking, the top 5 battery pack makers in India, whether lead acid or lithium ion, are working with us and in production. When it comes to OEMs in India, again, unfortunately, can't name some of these OEMs because they have not yet, I would say, formally launched their vehicles in some cases or formally announced their suppliers and partners. But I can tell you that some of the world's largest, not only India's largest, but some of the world's largest OEMs have selected us as their BMS supplier after a rigorous, testing and validation, almost 1.5 years, because it's also their entry into electrification. So they want to make sure they're choosing the right partners. And this is sort of what has led to a very strong order pipeline, like Anurang mentioned. And we will be entering into production with these OEMs very shortly this year and also next year.
Okay. And when you said world's largest OEMs, you're referring on the two-wheeler side?
Yes, 2 and 3-wheeler.
Okay.
Yes.
And lastly, can you talk about the other products which you are working on, which would be your focus area beyond BMS?
Yes, absolutely. So, look, essentially the way that you should think about Maxwell is a company that is focusing on building core capabilities at the intersection of those core capabilities, we'll be building new products in the future. Those capabilities can be defined as sensing, estimation, and functionally safe actuation, which means that we will be using advanced sensors to sense data, use that data, have proprietary algorithms that estimate values from that data, and based on that estimation, take action in a functionally safe manner. And BMS is, of course, one of the key products at that intersection. Now, apart from BMS, one of the products that we have already started doing R&D on is telematics. We believe that the telematics controllers are going to be a very valuable component into the sub-assemblies of electric vehicles as the world moves towards not only an electric but also a connected mobility environment moving forward. Practically all the new age OEMs want their vehicles connected to the cloud. They want to collect data from that. They want to analyze that data. They want to offer services on top of that. And all of those things will be unlocked with a telematics gateway, which has to be, again, functionally safe and automotive grade, which is our, I would say, next product, so to say, which will be the telematics controller. We also have a high voltage BMS that will be built for automotive, I would say, four-wheeler and buses, trucks applications. So we're going to be investing heavily on building again, ISO 26262 compliant automotive BMS for high voltage applications, not only on the mobility side, but also on stationary. So as we move towards renewable energy, there's a big ESS, grid connected batteries, UPSs opportunity, telecom opportunity that with 5G and 4G, the battery backups that go inside of these applications. There are really a lot of different variations in terms of applications of the BMS that we will build for, and also new product platforms like the TCU itself that will also go into.
Got it. Thanks. And just clarification on the European business, did we indicate that we have been only able to recover energy cost inflation on the 5% of our portfolio and balance 95% is what we are in discussion with?
Massimo, can you reply that?
Yes. No, we are able to recover due to our contract with our customer the material cost, the increase of material cost. And so it means that it's more or less 1% of our EBITDA, okay? But regarding the energy that affected our profitability in the previous financial year, more or less 3.2%, we are discussing with our customer. Till today, only BMW recognized the increase of these energy costs, but BMW unfortunately is 5% of the total portfolio, customer portfolio of Endurance. And so BMW, the increase of price of BMW has an impact of more or less 350,000 euros per year. Now we are discussing with our major customer. Our major customer, as you know, are Volkswagen Group with more or less 25%, Stellantis Group with another 27%, and Daimler with 18%. And we are working in order to try to convince them to recover part of this increase of energy in our price.
Got it. And in this quarter, we have seen substantial increase in the European business RM cost on QOQ basis. Is that more to do with the mix, or that's a reflection of higher aluminum and energy prices?
Sorry, can you repeat the question? An increase in which other expenses?
Raw material cost.
Raw material cost is due to the increase of raw material. Only in this quarter, we have had an impact in the cost of material of 6 million euros due to the increase of aluminum. In the total financial year, the increase is 15 million euros. But this increase of cost is 100% recognized by our customer. And so you have the impact in the cost of material and also in the revenue. For this reason, you have a reduction in your EBITDA in terms of percentage, because the total amount remains the same, but in terms of percentage, you have an impact, 1.1%. In fact, we closed the EBITDA with 14.1% in terms of percentage. Without consider the increase of aluminum, the EBITDA would have been 15.2%, 1.1% of difference.
Got it. And sorry, one last clarification on the India business. The incentives which we are getting, they are getting over by FY24, right? And the additional incentives which we are in discussion with the government. Can you clarify on that?
Okay, now I'll request Mr. Satyajit Ray, who's our director and CFO, to answer this.
Jinesh, the incentives, to give you broad numbers, out of roughly 446 crores over the last few years, we booked 265 crores already. Okay. So the balance will be booked over the next 3 to 4 years, and we'll apply for 2019 to 2024 scheme, where the threshold of application is on capex spent above 350 crores. So I can't tell you what the number will be when we apply sometime hopefully next year. At that point in time, once we get an eligibility certificate, we'll be able to talk about that. But another input would be that out of the 265 crores that we booked, we've already recovered 147 crores from Maharashtra government.
Got it. Thanks. I'll fall back in queue.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Yeah, hi. Thanks for the opportunity. Another first question, just a clarification on the Maxwell acquisition. Couple of things here. One, the upfront payment of 135 crores. How much does it? How much of the value goes into the company, and how much is paid as a part of buying shares of promoter? And secondly, did you give a breakup of the 150 crore order book in terms of how much is exports, domestic, or the vehicle segment? If not, if you can share that, please.
See, the first part, as far as the rupees 135 crores, that is something we'll not be able to share. And what was your second question?
150 crores breakup of orders.
Akhil, would you just give that? Yeah. So I'll request Akhil Aryan to give that.
So just clarifying, the question is the order pipeline, does that come from India or Europe, the breakup and applications of that, correct?
Exactly, yes.
Yeah, so, I would say that so far, I think this year, our business is going to come about 50-50 from India and from Europe. We plan on increasing the India share moving forward, especially because India is a focus and key market for us. So in terms of orders moving forward, especially the orders that we have in our pipeline, a large portion of that, so I would say over 80% comes from India. Fundamentally driven by the OEMs that I previously mentioned we are entering into production with, not just on the vehicle side, but also on the battery pack manufacturing and assembly. I also mentioned in the start that we are at an inflection point in India when it comes to electric vehicles and lithium-ion batteries in general. So a lot of business coming from India is actually, growing at a faster and faster pace as we go, quarter by quarter. But that being said, a large portion of the order book currently comes from Indian customers that we have been quoting and sort of really integrating our product with for the last 1.5 years. We are in the final stretch of entering production very soon this year, as well as in some products next year. In terms of the split of applications, a large portion of our focus has been 2 and 3 wheelers. So I would say at least, again, from the order pipeline, about 70% of that will come from 2-wheelers and 3-wheelers. The rest of it will come from a split of stationary storage, industrial applications, some other automotive applications that are smaller in size, which includes, bicycles, e-scooters, and so on. And last but not the least, some sample sales that we've started for the 4-wheeler application, because we want to try and enter that maybe, starting next year. We want to start quoting the customers and integrating with them as soon as possible, so that when push comes to shove, we have a product to launch.
Sure. And like you highlighted, you will be, you're targeting the entire spectrum of automobiles from 2-wheelers till, buses. So how do you see the, development to production time now with, Endurance backing and the Endurance cross-leveraging opportunity?
Look, I think the company right now is already in production, right? So we are not waiting for production. We are in supply and in production with many of our customers. The Endurance partnership helps us amplify that, right? So we are looking at this partnership to both consolidate our supply chain operations, manufacturing, R&D, and at the same time amplify business growth by entering new OEMs, new markets, new customers that, of course, Endurance has access to much better than us as it stands. So we already have a supply chain in place. We have a strong partner for manufacturing that is helping us, assemble these boards, deliver to our key customers that are in production. And as time passes, we will potentially try and bring that in-house, again, consolidate the strength, lower the cost for us, improve our margins, and be able to control that supply chain fully instead of having to depend on external sources.
Right. Thanks. Another couple of questions in the India business. One, could you highlight what was the ABS production for FY22 or sales value, and how do you see that in FY23? And similarly, what was the revenue from, let's say, Hyundai, Kia, or the four-wheeler aluminum casting? Have we ramped up to the overall order book of around 200 odd crores?
No. As far as Hyundai and Kia is concerned, it is approximately. We have done. I'll just tell you. We have done. First, I'll tell you about FY22. So it was with Kia and Hyundai. We have done. I'll just give me a minute.
Sure.
That is the right thing. So we have done about 140 crores in last year, which is in FY22.
Right.
And of course, this figure will increase now. I don't like to give forward-looking figures, but yes, I told you we have won 235 crore worth of orders. So let's see how it goes. We have a new plant at Vallam set up for that. And what was your earlier question? I'm sorry.
ABS, similar. I mean, either production number or value for FY22, and how do you see that ramping up, especially with semiconductor issues for this year? I mean, just a direction.
See, I just like to put it, by September 22, we'll reach the run rate of 400,000. And I think, though we started in the month of, we started in October of 2021. We started with 5,000, then did 7, then we did 10, we have reached 13. We also reached, I think, a figure of 18. Question is, it's a bit volatile because of the ABS ECU supplies we get from Mandohela, But now the position has improved. Even the Shanghai lockdown didn't help much. As you know, there was a lockdown in the last few weeks. But now things are opening up, and we are very confident that based on whatever stocks were there, the pipeline is there in process, in transit, and looking at this, whatever Mandohela has told us, that's why we are very confident by March we'll be able to reach the full run rate and continue with the supplies, because after we have reached 400,000, then of course, we are talking to other OEMs also. It's not only, we already started supplies, Royal Enfield, Bajaj. The opportunity is huge, 3 to 3.5 million, mainly controlled by Bosch. So we have a long way to go. And then of course we can think of starting to increase further the capacity beyond 400,000.
Right. Perfect. That's really helpful. Thank you and all the best.
Thank you. Participants, you are requested to limit your question to 2 at a time. The next question is from the line of Arvind Sharma from Citi. Please go ahead.
Hello. Good afternoon, sir. Thanks for taking my question. First, more on the number side, sir. Revenue and EBITDA for the European operations in euro terms, if you could please share for fourth quarter.
Massimo?
Quarter 4 euro.
Yes.
Would you have the quarter 4 euro numbers? In fact,
yes, for sure. We closed the previous quarter with a total income of 62.6 million euro, compared 61.4 million of the previous financial year. Total EBITDA 7.9 million euro, compared 11.4 million euro of the previous financial year, 12.6% in terms of percentage. Net result 2.7 million euro, compared 5.5 million euro of the previous financial year, and so it means 4.4% of net result. Without aluminum costs and without energy costs, the EBITDA in the quarter would have been 18.3% compared to 18.6% of the previous financial year.
Thank you so much for this. Now coming to the Maxwell acquisition, sorry from a reporting term, will you be reporting that part of your standalone numbers, or would it be a separately reported entity? Just asking because right now it's your European business is simply Concall minus standalone, but naturally if Maxwell is not reported in standalone, then we'll probably need some more details. So will it be reported as a separate entity or will it be part of the standalone business?
As and when this is Satyajit Rai here, as and when the acquisition is consummated, at that point in time, it will be a subsidiary of Endurance.
All right, sir. So we need to get separate numbers for that. It will not be just.
Yeah, there will be separate. It will be a part of the consolidated accounts, but at the time of the annual report, you will get separate subsidiary numbers, as is the statutory requirement.
Sure. Just finally, if you could just explain the BMS front. Is there any trend where the OEMs might be insourcing, i.e., going for backward integration in terms of BMS? Because right now, whatever you said, it seems that there is a dependence on OEMs outsourcing the BMS. So could it be because of proprietary reasons or maybe competitive reasons, OEMs kind of go and backward integrate the BMS?
I'll request Akhil Aryan to answer that.
Yeah, so I think again, there was a question around competitive advantages, and I think that, I'll repeat my answer to some extent over there. If you think about it from an OEM standpoint, right, right now, unlike the, for example, the Teslas or Aethers of the world, when they were trying to get into market, they've invested 10 years to try and build the product. But now with the electric vehicle journey becoming very real, a lot of OEMs need to get to market faster, right? So the time to market has to be kept into consideration. The second, from a safety and reliability standpoint, a lot of OEMs need to focus at the vehicle level and offering vehicle level services to the customers, just like a lot of the new age OEMs are doing. Whereas at the component level, they need something that is tried, tested, safe, and reliable that can hit the roads, in a fast, swift, but reliable manner. And so they're looking for strong partners that have done the R&D, just like us. For example, we started in 2017 when the EV revolution was not as strong, right? And we sort of spent the time removing all of the different issues and glitches that come along the way. Next, like I mentioned, from an R&D standpoint, there are a lot of improvements that can happen at an algorithm, so embedded software level, power management, and battery management overall, as well as charging and range optimization. And all of that R&D today, we have a 100-member team that is doing that R&D with Endurance support, with growing that to over 250 people. And any OEM for that matter, for one component, they are not setting up 300-member teams to try and build one component, optimize that component to a point where it's the world's most efficient or optimized product for what it does. The last thing that I want to highlight is when it comes to, of course, you are seeing the world with a semiconductor, shortage standpoint, and how difficult it is to really even, bring supply chains and operations together to make one single board a reality. From a cost standpoint, you've seen the cost of semiconductor components going up significantly. Now, in our case, because we are supplying to many OEMs, both India and international, we have the benefit of being able to buy in larger volumes. Those components have better, stronger relationships, not only with our tier 2, but also tier 3 and tier 4 partners to ensure that those components reach us in time. So what we have to offer to OEMs, even from a partnership standpoint, is not just the fact of whether they want to do this, in-house or not, but whether it comes to faster time to market, better technology, tried and tested supply, in-house R&D, optimized cost, improved features moving forward. All of that comes to them at an optimized cost when they work with us versus trying to do everything by themselves.
Thanks for this. That's all from my side. Thank you so much.
Thank you. The next question is from the line of Karan Kokane from Ambit Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my question and congratulations on a good set of numbers. Sir, I had a question on the India business and the Europe business as well. So I just wanted to understand what is the impact of the EV shift on the castings business. So what is the mix of engine parts within castings that can get impacted by the shift to electrification? So that would be my first question.
Yeah, so like I mentioned earlier, also as far as castings are concerned, we already started supplies for Bajaj Chetak, and soon we'll be starting supplies for the Bajaj three-wheelers. We are also in touch with other EV makers for castings. So just like to just give you a flavor that why casting becomes EV agnostic, because of course, like say for example, I take a two-wheeler. So you have in a IC engine casting like your crankcases, left hand, right hand. You have a cover, left hand, right hand. You have cylinder blocks, then you have cylinder head and cover. When it comes to a two-wheeler EV, you have the base MCU, you have the terminal base, terminal power, terminal ground, housing battery upper, housing battery lower, plate middle, plate upper, motor housings. So you have more number of castings, and the value is the same in spite of the weight being lower. So here you have 7 components which are higher weight than 9 castings in an EV which are lower weight, and the value add being similar. When you come to three-wheeler, you have similar castings, but you also have the case transmissions, both LH and RH added to it. So the types of castings are different. There are more number of castings having lower weight. Of course, in three-wheeler, there are almost 11 types of casting versus 9 type of castings in a two-wheeler, compared to 7 each in a two-wheeler, three-wheeler. But the weights are lower in as far as two-wheeler is concerned. In three-wheeler, the castings are more. They are 11, so the weight is higher overall. But the value add in a EV is much higher. And I mentioned this in the past also.
Okay. So thanks for that, sir. Second question is on the Europe business. So we've seen a strong sequential growth in revenues in the European business in 4Q. So is that largely explained by the input cost inflation pass-through, or is there something else going on over there as well?
Massimo?
Sorry, can you repeat the question, please?
Yes, sir. So basically, we've seen a strong sequential growth in European revenues. So is that explained by the input cost inflation pass-through, or is there something else over there?
So if we are speaking about the last quarter, we closed with 1.2 million euro of increase of turnover compared to the previous year. But if I offset the increase of material, the reduction of turnover would have been 4.2%. And so it means that the increase of turnover in the last quarter is only due to the raw material. And also the total financial year compared to the previous 2021, even if you see a reduction in total financial year, that is more or less an increase that is 10.6 million euro, 5.1%. If I offset the increase of material, there is a reduction of more or less 4%.
Okay, understood. And Anurag, just a last question on this Maxwell acquisition. Do we have any synergies, with our existing business product segments with this BMS product? Initially somebody asked what is the benefit that Endurance is bringing to the table. So we talked about customer access, but beyond that, existing product lines and BMS, any synergies that you're seeing over there? That would be my last question. Thanks.
So here, like I mentioned, we have already started our foray into embedded electronics when we got the EBS business, from our clients. And like I said, we are setting up our own embedded electronics lab in Chakan in Pune. And we are getting into electronic products for our products, like I said, for brakes, transmission and suspension, high-end products. And at the same time, we are getting into new electronic parts also. And I think with the acquisition of Maxwell, like Mr. Akhil Aryan mentioned, we'll be adding a lot of new products which they had planned and what we have planned. So it will make our journey much more easier now with such a strong team of 100 people at Maxwell and going up to 250. At the same time, we'll of course have our own electronic lab at Chakan. So now embedded electronics is a very large focus at Endurance, for the future.
Okay. Thanks. That's all from my end. I'll fall back in the queue.
The next question is from the line of Jay Shah from Capital PMS. Please go ahead.
Hi, and congratulations for a good set of numbers. I just wanted to get a macro picture, Anurag sir, from you that how is after all these headwinds that we faced in the past 3-4 years and actually come out, quite stronger. Now, how does the industry look going forward? Maybe two-wheelers, three-wheelers, or even passenger vehicles and utility vehicles across, domestic plus Europe. I mean, Europe maybe there might be some headwinds for the next few months, but what is the scenario on ground? Is it changing for good? Because the auto industry as a whole has been facing, a lot of brunt, the transitions and the commodity headwinds, everything, but we still managed to somehow stay strong. So what is the picture looking like on a macro basis going forward? Not looking for any specifics.
Yes, so I'll talk about India, then I'll request Mr. Venuti to Massimo to talk about Europe. So see our India business, as you know, 80% of that business is for two-wheelers. So motorcycles and scooters, largely it is for motorcycles. If you see the two-wheeler sales, in FY18, or I would say the manufacturing in India, FY18 was 23 million two-wheelers. In FY19, it was 24.4. FY20, which was amongst the, I would say, one of the bad years, was 20.9. FY21 went down to 18.4, mainly because of the first quarter, which we lost in the first COVID. But the pent-up demand really made up in the next 3 quarters. And in FY22, we have had the lowest number in years, which is 17.9 million. Now, the challenges which we are facing, as you know, are, of course, the semiconductor shortages. Today, I know our OEMs are losing anywhere between 40,000 to 60,000 vehicles a month, and they're telling us there's a strong pent-up demand, which is playing up. Now, the question is, according to me, till this electronics settles down, which people are telling us from Q2 is when they expect in India, but we'll have to wait and see, because for our ABSs, I've said it will be September, So we'll have to see how, because India is, I've always mentioned, is a 24 million two-wheeler market, and it has to grow. There are reports saying it should go to 30 million by FY26, FY27. So the question is, it will all depend on the external environment. Today, the semiconductors. Secondly, the commodity prices have gone through the roof. Last 7 quarters have seen unprecedented increases in steel and aluminium, with small dips here and there, which is there. At the same time, you have ocean freights, which have gone up substantially. There's a shortage of containers. So we are living in a very, very difficult period. So in fact, if you ask me personally, we are a cash positive company, but it's been one of the most challenging years, and I can say for both India and Europe. And Massimo will also say that it's been one of the most difficult years, and to reach these numbers are because of our past strategy, which I've always said is of outsourcing to good suppliers, consolidation of our plants, even which we did during COVID period, and a very strong sourcing team which we have, and our operational efficiency. And that's why you see the kind of margins in one of the most difficult periods, which at least I can say I've faced after the 2008 financial crisis. So I'm of course very positive about the future. I really hope the semiconductor issues get sorted out fast, which is according to me the major reason now for lower volumes both in India and Europe. Massimo, would you like to add anything about Europe?
Yes. First of all, I remark your position regarding the strong situation of endurance into the market. One of the major points of strength of endurance, I continue to say, in Europe in this moment is we are debt free, and also in a difficult financial year like the 21st and 22, we have been able in Europe to increase our cash net financial position of 5 million euros. Today we have 25 million euro cash, and this can make the difference in the future 12-18 months, because for sure the period is very tough, and apparently considering also the actual of April and the projection of May and June will be very tough also in the future. But from my point of view, we have to see the situation of the automotive market considering the last 5 years. In Europe, we lost 4 million of registration. We closed in 2024 with 13 million of vehicles. And you can imagine what does it mean for a manufacturing company as we are. When you reduce your turnover of 30%, 35%, But as endurance, we lost, compared to the pre-COVID situation, only is not the correct word probably, but 17-18% due to the important acquisition done in the past. Why I'm optimistic for the future? Because we are taking new business, and please consider that one of the major problems in the past was our dependence from an important way from the diesel technology, gasoline, internal combustion engine. Today we acquired business and we have a visibility at the end of 2027. I know that the interest of everybody is tomorrow morning, but for me, when I go to sleep in the evening, I know that endurance in 2027 has more or less 80% of the actual product portfolio acquired in electric, plug-in, and mild hybrid. Believe me that I'm optimistic compared to 24 months ago. For sure, we are thinking about the future, but in a year tough as 21-22, we close with 14% of EBITDA and making profit, making cash profit, reducing our financial debt, or increasing our liquidity. With the visibility of more or less 60 million euros of investment that we have to do in the next 3 years for the new project in the electrical field, I want to be optimistic, even if the situation today is very tough. You can imagine in this moment it's not only a problem of electricity, it's another problem of raw material. Europe bought 90% of the raw material to produce batteries from Russia and China. And so sooner or later we have to discuss about this transition, because probably we have to postpone the rules that will oblige the OEM to produce only electrical vehicles starting from 2030. But I'm pretty sure that something will happen in the next month. As endurance, I continue to say the most important thing is the acquisition of new order for the future.
Absolutely. That's what I said. We've actually stayed true to our name, endurance, despite of so many headwinds. So congratulations to the management again.
Thank you. It's very well put.
Thank you.
Thank you. The next question is from the line of Jay Kale from Elara. Please go ahead.
Yeah, thanks for taking my question, and congratulations on a good set of results. So my first question is regarding your existing products market share in the EV portfolio. So how should one look at it? While we understand that you've been you've acquired this Maxwell and you want to increase your content per vehicle in on the EV side of it as well. But if I have to look at your existing products market share, it may be these are initial days, but it could be a little lower than what your ICE vehicle market share is for the suspension product. So any steps that the company is taking to improve our EV market share in their existing products, and how should one look at that portfolio in the next 4-5 years, be it suspension or casting products for the EV two-wheeler?
Yeah, see, the way that I like to put it is that, as you know, we've already won about 15 million worth of orders for EVs, for brakes, for suspension, mainly, largely. Of course, with Bajaj 2 and 3-wheelers, we are 100%, whatever they make as of now. And I can only say that, because it is very early days, because today EVs are about less than 1% of the total market, the last figure I saw, of the total automobile market. So I can only say that we are engaged with every single EV company which matters, and we are going all out to take business. And like I said last time, we were a bit late in the day. We started our engagement process a bit late, but we are making up pretty fast now because of our strength of our technology, our pricing. We are making up. So I'm just trying to put it that we are highly focused to get more and more business, And it's a bit too early to talk about now wallet share. I can only say the pricing is quite similar. Casting I've already shared. The pricing is quite similar on the casting front. And suspension also we see is quite similar to EV suspensions. Compression and the tension forces may vary, but it's very similar. The pricing is similar. The braking prices are similar. So I don't see any issue once we get the business, In fact, what is that major business coming from scooters, where today the endurance share of business is hardly 8%, of its India. And this we need to really grow. And fortunately, EVs are coming more in scooters. compared to motorcycles. So for us, all the scooter business which we win is going to be extra. Because I'm not seeing many motorcycle companies coming in, barring Revolt or Torque, and so I think the scooter business will be, additional business. But having said that, we are fully engaged on scooters, motorcycles, three-wheelers.
Understood. Great. So thanks and all the best.
Thank you.
Thank you. We'll take one last question, which is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Hello. So my question is more around the asset and depreciation. So if I look at the depreciation, it's almost 16% of net fixed asset. Usually the auto industry, it's around 10-12%. So with that, what is the reason for high depreciation and what is your annual maintenance capex? And again, related to asset, the asset turns from last 3-5 years from 3.5, it has fallen to 2.8. So can you highlight the reasons and how do you see it panning out in the next 2-3 years?
Yeah, so I'll request Mr. Satri Gray to answer this.
So the first question is on depreciation, right?
Yeah.
Yeah, okay. So you look at, I don't think one should look at endurance and compare it with other auto ancillaries in India because endurance is distinctly broken into 4 businesses. One is die casting, one is suspension, one is brakes, one is clutch, which is transmission. So the asset requirement of these businesses are different. So in case of endurance, if you look at the annual numbers, you will see that our depreciation annually is about 200 crores. So which follows the Companies Act rate of depreciation. So I don't see a problem with that, and it has nothing to do with the kind of percentage it should be on the gross fixed asset because you are looking at 4 distinct businesses. You are seeing a blended number at the company level. So probably that percentage is not representative. Now, what was the second question?
Sir, what is the maintenance capex?
Maintenance capex is next to nothing because in the last 2 years, about 70-75% of our capex has gone into expansions. In fact, last year, the major 2 expansions were in the brakes and our alloy wheel expansion, which we have disclosed in our previous conference call. So maintenance capex 2-3%, 5%, it's never more than that.
Okay. And so the last question was on asset turns, which I see net fixed asset has fallen from 3.5 to 2.8. So what is the view going forward for next 2-3 years?
No, the problem is that if you see last year probably is not the best year to compare. I mean, it's a very difficult comparison. In quarter 1 of 2021, we were at nowhere. Then the next 3 quarters were very strong. So last year again, you see major, whatever growth you are seeing is a function of metal price increase. So asset turnover numbers probably are not as representative as they would be in a steady state business situation.
Sure. So we are confident once the demand comes back and the auto cycle revives, they will again go to their, the best of the scenarios.
Yes.
Okay. Okay, sir. Thanks a lot and wish you all the best.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
No, well, we have no further closing comments. Whatever we had to say in my opening remarks, I mentioned that. And whatever questions we had, we have answered. So there are no further closing comments.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.